Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 437 on July 24th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on EOS Energy Enterprises, Fermi Inc, Lucid Group Inc, and the iShares Bitcoin Trust Beneficial Interest ETF. And we discuss 4 new trades on T1 Energy, Sable Offshore Corporation, Mobileye Global Inc, and the iShares Ethereum Trust ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here or about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets finished the week lower by less than 1%. The Dow Jones Industrial Average lost 199 points, closing on Friday at 51,947 points. The S&P 500 index lost 45 points, ending the week at 7,411 points. And now it's time for the topic of the week. The topic of the week is hesitation. Have you ever spent the day waiting for your indicators to line up so that you can make the perfect trade, and it finally happens, and you know the trade to make? Then you hesitate and the opportunity passes. Or maybe you get in late, but you don't make as much money as you would have if you taken the trade at the right time. This happened to me twice this past week, so don't think that somehow you'll stop hesitating automatically in the future. I've been working on adding some new strategies to my trading style, my daily trading, and I have not shown the same confidence that I historically would. That lack of confidence has led to hesitation, and hesitation leads to less money and sometimes even a loss of money. So you need your confidence in order to make profitable trades. The more profit you make, the more confidence you're going to have. My first tip for gaining more confidence is to lower your size if you can. If you're only trading one option at a time, maybe consider trading spreads instead so that you further lower the amount of risk of loss. Do whatever is needed in order to gain your confidence back. The second tip is to visualize yourself making successful trade after successful trade. People don't talk about the power of visualization much anymore, but it has been studied in labs and proven to be beneficial. I'm certainly not above it. And finally, trust your model. At some point, you have to just take the plunge. Don't allow hesitation to cost you more money. Do the work to be more confident and take the trades you've set out to execute. If you find yourself hesitating due to a lack of confidence, just know that you're not alone. It's okay. Acknowledge it, but don't stay there. You can fix it. All right, so that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We'll start off with the covered call on EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. At the time, the stock was trading for $4.13 per share. I looked at buying stock and selling the August 4.5 call at 55 cents, hoping for a 22.28% return in 5 weeks. Well, shares of EOS fell 66 cents, ending the week at $3.47 per share. The call option we sold lost 24 cents, leaving us with a net loss of 42 cents if we were to close the trade out immediately. Now, the stock price is below our break-even point, which means we can definitely make an adjustment if we like. Plus, the call options are priced in a way where we can offset our entire loss by rolling the strike lower. We can buy the 4.5 strike for 31 cents and then sell the 3.5 strike at 50 cents. This would cover the 42-cent loss that we took on for the first week. Now, it does have an effect on your total possible profit available for the trade, so always make sure that you do all of the math before entering a trade, and certainly do it again before making any adjustments. Next, we have our cash secured put on Fermi Inc, symbol F as in Foxtrot, R as in Romeo, M as in Mike, I as in India. At the time, the stock was trading for $6.03 per share. I looked at selling the August 6 put at 90 cents. That could give us a 15% return. Now, shares of Fermi jumped $1.37 higher, ending the week at $7.40 per share. The out-of-the-money put that we sold is still out of the money, which means the trade is working out as planned. The stock is more than $2 above our break-even point right now. Our goal is for this option to expire out of the money in 4 weeks, allowing us to keep the full premium we collected for selling the option. So far, no adjustments are needed. Next, we have our credit spread on Lucid Group Inc, symbol L as in Lima, C as in Charlie, I as in India, D as in Delta. At the time, the stock was trading for $7.34 per share. I looked at selling the August 7/6 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Well, shares of Lucid Group lost $1.04, ending the week at $6.30 per share. The out-of-the-money put spread that we sold is now at the money. The stock price is between our strikes, and the spread currently has 70 cents of intrinsic value. The stock price is also 37 cents below the break-even price, so we are justified to make an adjustment. Now, I would typically look to sell the upper strike call spread to create an iron condor. Right now, we would only collect 11 cents on that. That would lower our maximum possible loss down to 56 cents, but that's not super appealing. Now, I could sell the 6/7 call spread at 46 cents. This would mean that we sold the 6/7 box at 79 cents, which would lock in a loss of 21 cents no matter what the stock does. Now, that is significantly lower than our loss on the put spread for the week and better than selling the iron condor, and it's even better than our maximum possible loss right up front. However, this stock still has 4 weeks of price movement, y'all. So just like it went lower this week, it could absolutely go back higher next week. So I'm going to choose to exercise a little bit of patience and wait a few days before making any changes. But I do have a couple of plans for adjustments to lower my maximum possible loss. Again, do the math first. You don't want to add to the risk. You want to make sure that you're capping it. And finally, we have our debit spread. We looked at the iShares Bitcoin Trust Beneficial Interest ETF, symbol I as in India, B as in Bravo, I as in India, T as in Tango. At the time, the stock was trading for $36.33 per share. I looked at buying the August 35/36 call spread for 66 cents. That could give us a maximum gain of 34 cents, or that's a 51.52% return in 4 weeks. Shares of IBIT grew 1 cent, ending the week at $36.34 per share. The in-the-money call spread that we purchased is still in the money. All of our original economics are still in place, and that means this trade is working out as planned so far. No adjustments are needed. So that's it for the review of last week's trades. All new trades on the podcast will use the August 21st expiration date for monthly options in August. So let's start off with the covered call. I'm looking at T1 Energy, symbol T as in Tango, E as in Echo. The stock ended the week at $4.99 per share. I'm looking at buying stock and selling the August 5 call at 80 cents, hoping for a return of 16.23% in 4 weeks. Now you enter this trade by buying stock for $4.99 and then selling the August 5 call at 80 cents. This trade makes the most money if stock prices finish above $5 per share. The break-even price on this trade is $4.19 per share. In real terms, the stock purchase will require $499 and you'll collect $80 for selling the option. Next up, I'm looking at the cash secured put on Sable Offshore Corporation, symbol S as in Sierra, O as in Oscar, C as in Charlie. The stock ended the week at $4.71 per share. I'm looking at selling the August 4/2 put at 57 cents, hoping for a return of 12.67%. Then you enter this trade by selling the August 4/2 put at 57 cents. This trade makes the most money if stock prices finish above $4.50 per share. The break-even price is $3.93 per share. In real terms, you'll collect $57 for selling the put option, and you'll have $450 locked up just in case you need to purchase the stock. Next, we have the credit spread on Mobileye Global Inc., symbol M as in Mike, B as in Bravo, L as in Lima, Y as in Yankee. The stock ended the week at $8.04 per share. I'm looking at selling the August 8 7.5 put spread at 18 cents. That could give us a maximum possible loss of 32 cents per spread. Now you enter this trade by selling the August 8 put at 55 cents and concurrently buying the August 7.5 put for 37 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $8 per share. The break-even price on this trade is $7.82 per share. In real terms, you'll receive $18 per spread that you sell and have $32 at risk. And our final trade on today's show is going to be a debit spread. I'm looking at the iShares Ethereum Trust ETF, symbol E as in Echo, T as in Tango, H as in Hotel, A as in Alpha. Stock ended the week at $14.03 per share. I'm looking at buying the August 13.5, 14 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that would be a 51.52% return in 4 weeks. Then you enter this trade by buying the August 13.5 call for $1.10 and selling the August 14 call at 77 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $14 per share. The break-even price on this trade is $13.83 per share. In real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. Thank you guys so much for listening, sharing, writing reviews and comments, sending emails, everything that you guys do. You're amazing. I hope you have a fantastic weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.